And they support the theory that I have that earnings are going to come in well short of expectations. And I said, excuse me? But you know what? Here we are a day later with this inflation print, with people trying to understand exactly what he may have been getting at, and with the day that was a poor one overall for software stocks in particular yesterday.
Was. So we have, Carl, it's very easy to say today is the day where you realize that earnings are going to be weak and we have terrible inflation, which is the classic stagflation of when we look at the back with the 41 years. Now, why could I possibly interpret things positive? Because I've seen a commodity collapse, the likes of which is really extraordinary. Hot rolled steel, basic steel, it's in free fall. Aluminum's in free fall. Go look at your car. Take a look what's in your car. It's everything. And so you either think that GM is going to have a blowout quarter, or you realize, you know what, they're going to have so many cars out there that you're going to be able to just wait. Now, leasing of a car is going to be up a little bit. And this darn rental, the rental of apartments is so bad. That's where people are hung. They have to stay with their parents. But I think soon houses will go down.
Rental is so tight that it's so expensive.
Right. Affordability is so bad. Although I'm sure you saw housing down month on month in Seattle, in San Jose,
in the hottest
in
markets.
Austin.
In the hottest markets, housing is down.
New York is obvious, and when it comes to rental,
New York
is
is
also
big rollover.
Is an
don't
incredibly
look
hot
at
market.
Zillow. You're down like 25%. Your west side in the 80s.
I don't look at it.
Down
Doesn't
20.
matter.
I look at his all the time.
Thank you. Are
no
you planning on buying me out?
Look, I'm busy looking at that. I'm not listening to Bill McDermott talk on my show. Can I just say once again, let's go back to Bill McDermott. It is without a doubt, the dollar is the single biggest problem. And that's not going to go away if the Fed hikes. It's just going to be accentuated.
Right.
So I think the dollar, we could get, it might be not parity, but 90. So, I mean,
By the way, if that's the case, we're all doing the show from Europe.
Oh, yeah.
My place.
And by the way, new clothes every day.
We'll do it from my place.
Live from Amsterdam.
We'll do it from my place.
We'll do it from Italy.
We'll do it from my place. It'll be terrific.
Oh, I can't wait. Can we do it anyway?
When you were at the place, what did you think of it?
It's gorgeous.
Thank you.
Still waiting.
Waiting.
One of us has been there.
Can I just say that when I see the numbers down today, I recognize that it's entirely possible that tomorrow could be a little better. But I still think it needs 100 basis points. But then after 100 basis points, why not wait?
So you are in the 100 camp for this
because
month.
you got to kill it. You got to kill it. You got to be like Volcker as far as the short term. But when I hear Austin Glubbs, we say we have to be like Volcker in the longer term. Are you kidding me? I mean, long-term rates were so high to begin with. He's not going to take short-term rates to 18. He's not. Now, it does look, when I look at the 3-year, I would extrapolate and say that the rates could go to 4. That would be very high.